Hi, this is Zach Mir with the US Chartbreakers here at Zach's Traders Cafe for Friday the 21st of March. Starting off with the S&P, which is basically failing towards the 5,700 level. Below that on an end-of-day close basis, got the risk of having to test that support line projection from back in December. That's currently running towards 5470, and maybe we'll see that happen by the end of this month. End-of-day close above 5,700. We're looking at the old initial January 2025 support there around the 5780 level. But the way things are, and with the RSI below 50, probably one would look for another test of support. Next up is the Nasdaq, and here it's a similar picture in terms of the intraday failure at resistance, so 19,900. That leaves us open to the prospect of a move down to that December support line projection. 19,100. On the upside, the next level up is from November, and that is 20,300. But the way things are going, it looks as though the next move here would be down rather than up. Moving on to the stocks, and starting off with a stock which we have had a look at before, Aeva Technologies, and here you can see that there's been unfilled gap to the upside and follow through on that. We're back above the old support there from November. That was around $3.30. Initial target here from here up to $4.60, and best case would be up to the resistance line projection from back in last summer, last summer rather, and that's heading for up to $6.20, which we will look for by the end of next month while we're above the 50-day line at $3.84. Next up on the list is Apollomics, and here you can see that we've got this broadening triangle, the top of the triangle there at a rather high level up to $15.80, and we've gapped through the 50-day line, so expecting moves towards that direction, maybe as soon as the end of next month, while we're above the 50-day line at $18 as well, $8.19. Next up, a stock which gets quite a lot of coverage here, Cervomed, and here you can see why. We hoped that the shares would get back in within that falling trend channel there, $5.80, with the top of the range there at $12.30. We just missed it yesterday, just missed hitting that line, but an end-of-day close above $12.30, and we can have another leg up as high as $18 by the end of next month. Ideally, we stay on the right side of $10 now, as that was the midweek resistance for the shares. Moving on to Google / Alphabet, and here it's interesting that after the losses that we've had over the recent past, we seem to be near to the floor of a rising trend channel. That's around the $1.60, we'll call it the $1.60 area, and above that there's a chance of a rebound to fill that gap up towards $172, but still can't rule out a further dive and a retest of September support towards 150, but at the moment it looks like we are seeing the floor of that channel. Onto a stock which we have covered a few days ago. It's HF Foods, and here we managed to hit our initial target there, $2.90. Above that, we're now looking for up to $4.55 by the end of next month, and the way things are going, looks as though we might get that by the end of next week, but let's see how we do on that. Ideally, we stay above resistance on the way down. That was around $3.30. Moving on to Impact Biomedical, and here, a bit of a messy chart after blowing the floor of that rising trend channel out and the 50-day line. But we have broken, and we are above the 50-day line at $1.60. And the longer we stay above that 50-day line, the greater the chance of a move to the top of that rising trend channel, as high as $3.80 by the end of next month. But the key here is holding that 50-day line. On to Meta, which is echoing what we're seeing at Google in the sense that it looks like we're at the floor of the formation there towards $576. The longer we stay above that, the greater the chance of a move back towards recent resistance at $630 by the end of next month. On to another stock which has some promise. It's a broadening triangle here from Nanovibronix, and here you can see that we've just we're nudging the 50-day line there at $4.52. Above that, looking for the top of the triangle from September as high as $10 by the end of next month. We're helped by the way, that the shares have gapped up after gapping down, so it's a bear trap island reversal, one of our favourite setups, largely because that's a setup that tends to work. On to the last few, and starting off with Outset Medical, which has managed to deliver a bear trap rebound from the floor of that broadening triangle from November. Need to see an end-of-day close above the 50-day line at $11.57 to give us potential of a retest of last month's resistance through $15.80 by the end of next month. Stock which is trying to rebound quite well at the moment is Rent the Runway, and almost identical chart to the previous situation. But Rent here looking decent in the sense that we've had a first nudge of that 50-day line. End of day close above that at $6.73. We could be looking at the main resistance line target from back in the summer of last year, as high as $11.55. And we'll be looking for that by the end of next month. Star of the show is the last stock on the list, which is Regencell, and here we were looking for the $27 area, which was the top of that rising trend channel. Next level up, $39 at the upper parallel of that rising trend channel. And I suppose we've got a best case scenario situation now that if we can stay above, or on the right side of $40, we could hit that resistance line there from the summer of 2023 as high as $56. And in fact, if you look at the pre-market, it looks like we've already done that. So there we are, the prediction carried out even before it was actually said. But that's it for me today. More updates over the weekend.